This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Riley Smith.
Good day and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Riley Smith. Today is Tuesday, October 17th of 2023. We're so glad you could join us for today's show. In today's episode, I talk with Joe Heinrich. He is the Executive Director of the Smart Carbon Network. We've had him on a few times already to talk about carbon markets, carbon capture, and carbon pipelines more specifically. We have an update since then, as North Dakota and South Dakota specifically have been denying those bids for carbon pipeline projects. So we've been talking about what exactly the carbon market industry is going to do moving forward. We also have a check of that ag weather outlook, but first let's run down the markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
At the end of another trading day in the ag marketplace, we're talking with Jacob Burks of agmarket.net. Before we really get things rolling here, Jacob, what do we see in the grain markets?
Grain markets today, we saw corn really quiet. Overnight range, today's trading range was around a nickel for the old crop corn. 3 cents out into the new crop. So not a lot of trading, not a lot of activity. You see the soybeans kind of took the role of being the market mover today. Led by the soybean meal, we ended up being trading above $4 in the December soybean meal. That's something that we've discussed, that potentially we're seeing maybe some export business. Remember, Argentina had such a bad year; they're the world's leader in export business from the soybean meal side of things. But it's kind of odd having a large crush number that came out with stocks of soybean oil going down. So that was the positive thing for the beans. That's what's pushed us back up to these highs that we saw on the report. But today we actually pushed through the $13 level. So we went through that. We traded up to 13.03 in November. We backed down, closed below it. So there's some technical resistance there that we'll have to hammer through. But all in all, a good day for the soybeans, up to 11.5 cents at the close.
Now, I think something pretty interesting is, we always talk about soybean crush, but that's a little one of those marketing terms that maybe not everybody's super familiar with. So when we talk about soybean crush, let's maybe, explain a little bit on how it's literally when we crush the soybeans and then looking at the byproducts from that.
You got a certain amount of meal that comes out of the soybean. You got a certain amount of oil that comes out of the soybean. So when you look at what does it take to produce what you're looking for, what you're desiring, the soybean meal is, basically a byproduct of what we're crushing the soybeans for renewable diesel, for other edibles, for whatever product that you need out of that soybean oil. Comes the byproduct of a meal like DDGs, and some DDGs and the protein contents. I'm no nutritionalist, but I would say that there's a point to where you can start supplementing the feed product. So when you talk about soybean crush, we're crushing the soybean to get a product of soybean oil with a byproduct of soybean meal.
And then looking at global conditions as well, obviously we have conflicts in the Middle East, still have that war going on in Russia, and then even, not necessarily on the terrible side of things, we're looking in Brazil at a large crop and a competition there. So a lot of factors weighing in right now, but it feels like the U.S. markets are kind of, almost kind of weighing in on itself right now.
You're at the pivotal time of year for the United States. This is when we harvest our huge crop. We produce the most corn in the world. We second now in the soybeans, but we're at a point where this is the focus is on us. All the weather we talked about now all that's coming to fruition. This is also the time where we're typically are exporting the most amount of soybeans first, and then we get into the corn season a little bit later because we typically store more corn. So we're playing on our own fundamentals at this point. As everybody's in the combine still, and the tractors and guys out east are hoping to get in the combines quickly. You'll start moving your focus into that South American crop, because in about 6 months we'll start talking about what is the potential for that. When I say 6 months, we're already talking about it. It's already there. We're already looking at what's going to be there for that South American crop. You got to think we had a very, very large South American soybean position this year. And we had South America or Argentina producing about half of what they should due to drought. So a lot of focus on that right now because they're still in that drought. We're still looking at wheat numbers there that are not close to where they usually are. And then we need to recharge. They need to recharge their soil to be able to produce that crop that we're anticipating for them next year.
And then looking at the livestock side of things, what do we see in those cattle and hog markets today?
Really, it was a quiet day trading all the way around. You saw the livestock, live cattle, were trading 20-30 lower, or excuse me, 20-30 higher, with the feeder cattle being up over $1.20, $1.30 out there in some of the back months. All in all, we saw cattle, looking strong. That trade between cattle and hogs have been still continuing to spread. If you look at what Brian was talking about previously with the charts of that channel that we're looking at on just that spread alone, not something that you usually look at that spread on a technical perspective, but we're getting back up to the top end of that range. So that's something to watch there. And you saw the hogs, you fall off about $1 here. So down on some support lines in the hogs, the spread between the two is getting to an extended level as well. So that's something to pay attention to, differences between hogs and cattle.
And then, of course, we're really entering that kind of additional push for demand because obviously we're looking at summer grilling season is that big area of demand, but we are getting into Thanksgiving, Christmas, that holiday demand season. Is that factored mostly in at this point as people are already preparing to stock that up, or how are we looking there?
No, I don't think so. I mean, there's a lot of dynamics that change as you look at the whole protein complex, if you want, when you're looking at that chicken and poultry to the hog market, to pork and to beef. And I think that when you go into this, getting prepared for the holiday seasons through, you're looking for that seasonal uptick in the live cattle prices, just because that's what they're building for in the Packers. The problem that you still have in the Packers is there's just not as much cattle out there. We haven't started the rebuild of the herd. When cow slaughter is down, just dairy cattle, we're not killing as many cull cows in the dairy world. So there's just a beef production in general. I believe our kill last week was 11,000 head, smaller than the week before. We're 40,000 head smaller than last year. So that's just saying, hey, the beef production that's out there is a little bit lighter. So these Packers that we've seen recently, we're trading 185 to 188 in the north in the cash market. They've had to really pay up, and they're moving these kills forward as well. So that's just saying, hey, we're trying to stay current. When we talk about Packers staying current, that's just saying that we're not lagging behind. The Packers don't have as much control of the price because they need to fill their orders.
All right, Jacob, lots of great information today. For those of our listeners and our viewers who'd like to get in touch and get more great market analysis from the folks at agmarket.net, how can they do that?
Yeah, agmarket.net. Take a look at our 30-day free trial of our Intel. That's all of our commentary. We'll set you up to hear what we have to say and what we're thinking. And then you can just find us on the About Us section of our website right there.
Great talking with you as always, Jacob, and we look forward to getting more great analysis soon.
Thanks for having me, guys. Y'all have a good one.
That again was Jacob Burks of agmarket.net. We'll take a look at how those numbers close. That's courtesy of the folks at Bar Chart. At the close, December corn down 1 even at 4.89 even. November soybeans up 10.5 at 12.96 3/4. December soybean meal up 9.60 at 3.99.80. Soybean oil down 55 cents at 55.35. Chicago wheat down 6 3/4 at 5.70 Minneapolis spring wheat down 1 even at 7.27 3/4. Kansas City hard red wheat down 2 even at 6.66 3/4. December oats down 7.5 at 3.74 1/4. On the Merc, December live cattle up 32 at 186.87. November feeders up 52 at 250.45. December lean hogs down 75 at 67.55. December pork cutout down 72 at 77.32. And October Class 3 milk up a penny at 16.82. And that's been a check of the markets here on Ag Matters PM. We're going to take a quick break to hear from our sponsor, the Iowa Soybean Association and the Soy Checkoff. When we come back, I talk with Joe Heinrich. He is the Executive Director of the Smart Carbon Network. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Riley Smith. Recently had the chance to catch up again with Joe Heinrich, the Executive Director of the Smart Carbon Network. Since the last time we spoke, North Dakota and South Dakota have both rejected bids for carbon pipelines to run through the state. Talk with Joe about how there's a lot of emotion in this discussion, and they're trying to separate that emotion to make sure that farmers, especially, will be able to take advantage of this opportunity for additional revenue. It would also help to build up jobs in rural communities. Now, it's an opportunity that might be getting overlooked because of some kind of predetermined notions on carbon markets and carbon pipelines in particular. Talking with Joe Heinrich of the Smart Carbon Network. Joe, always great to talk with you. Of course, recently we've heard a lot about all these carbon pipelines and a lot of states, and we're looking at North Dakota, South Dakota, talking about this pipeline. We've mentioned before a highly emotional discussion, and most recently they've kind of rejected the bids for those carbon pipelines. But as we were just talking before we got started here, the main issue that we're looking at isn't the carbon pipelining being on one side or the other of it. It's carbon capture is what we're really going for here.
Oh, yes, definitely. And as we talked just before we went on the air, that it seems like we've gotten so much of talking about that puzzle. When I talk about that puzzle, to talk about that piece of the puzzle that's the transportation. And we've almost gotten to the point where, are you for or against the pipeline? And it's very emotional talking about that. And we're forgetting to talk about the whole concept of carbon capture and why it's important, why it's here, and why we need to, as the Midwest, both in agriculture and rural communities, to look at this as economic development, look at CO2 as a commodity. That's what I keep telling everybody. It's a commodity, and we need to work through it. If there's issues with the pipeline, as far as how it's going, as far as the eminent domain, safety and those things, let's work through it. A lot of those questions can be answered, but we have to be listening to each other. We have to be good Midwesterners and take the time to respectfully have the discussion. And that's what we've been trying to do. And I think there's that opportunity right now as we look at the potential that maybe some of this actually isn't going to happen. How is that going to affect the economy in the upper Midwest?
Yeah, I think something that's really important to highlight here is a recent quote from me is that states and counties need to be mindful about chasing away sound investments. We hear so many reports about farm income getting lower, and it's tougher to find new ways to make sure that farm is at a profitable level. Well, here right now, as we've talked a lot, is an option that farmers can have for additional farm income, but it has to be considered as that, like you just said, and not as possibly on other sides of the issue.
Yeah, and it's really, to me, it's a three-prong event. Now, we talk about the agricultural side. It's obviously going to have a major effect if we don't have carbon capture in the Midwest, because when you have low-carbon ethanol, if another area can produce it, another state, another region, the emphasis will go there. It's going to take away from what we're getting paid for our corn in this area. And when you have 2/3 of the corn in South Dakota going to ethanol, you're having half the corn in Iowa go. I think is at 40-some% in Illinois. That's big numbers, and we could definitely lose it on that part. Also, it's economic development as far as in those communities where these ethanol plants are, and things we don't even think about. Let's think about like plastic companies, fertilizer companies, and above all, I keep talking about electricity. I just had another discussion with an electric group, and they're talking about that base load electricity, and they're going to be regulated into doing low carbon base load electricity, and their best option is carbon capture, and that affects everybody across the Midwest if you want available, affordable, and reliable electricity. And there's so many prongs that go out from it, not to even mention the new development of new products, new industries that will come down the road that's a benefit to us.
I think something important to point out on that as well is when talking about carbon capture, it's not the, excess production of carbon or anything like that we're trying to create more. It's more carbon utilization. We're looking at things that are already existing, already producing carbon, and taking that and repurposing it, like you said, to make even more new products, even outside of what you might think of already.
Exactly. And that's that third prong is as more research is being done, they're finding more ways that we could actually utilize the CO2 in industry. Let's be taking advantage of that. And that's the discussion we have to have. I really believe if we get to the understanding of why this is economically so important for the Midwest, then we can start addressing the issues that come with the transportation part. Because right now, I talked to an individual the other day and they said, well, we just aren't hearing that side that you're talking about. And that's because it's so emotional. People are kind of scared to talk about it in public. And we've got to get beyond that. We have an opportunity, and it's a certain point in time that we have this opportunity open to us. And I worry very much that we're going to miss that opportunity. And then that change is going to control us as far as where it goes, where it ends up, what we benefit economically in the Midwest from if we don't help control where this goes.
Right. And, like you said earlier, and you mentioned it, we're kind of getting towards the point where you might have to think of, okay, if we can't get these pipelines to go through, what does that picture look like there? If we can't continue to have that conversation, what does the picture look like next? So as you guys are thinking of it right now from this position, what does that picture look like next for the possibility of, maybe they won't listen to these pipeline discussions?
Right. And there's going to be a lot of things that go with it. Too much to talk about on this one interview, but it's going to be as far as maybe some of those ethanol plants are going to be able to adapt, and they'll find options to capture the carbon and move it in some other form. It's going to be more expensive, but they would be able to do that. They're going to have the economics behind them to do it, or the efficiency of scale. So it'd be ones with more than one plant. You've got a lot of plants across the Midwest that are, farmer owned or farmer invested. Will they be able to do that? And then that hurts that economics, and it's the basis that we'll get from it. And I still talk about that rural economic development. If those plants move, if the ethanol demand for low carbon moves to other areas and they're able to capture it, say east, in Ohio, Indiana, those areas, that leaves us kind of out on a limb for what we can do. And that comes back to the agricultural side. That comes back to those communities that have those ethanol plants in the area. And that's just the agricultural part. Like I said, there's so much more that goes with this when we're looking at the whole picture.
Joe, lots of great discussion today, as always. Is there anything else as we're looking at the carbon capture, carbon pipeline, anything with the Smart Carbon Network that our viewers and listeners should know about today?
Well, first off, if you folks, anybody has any questions, go to smartcarbonnetwork.com. Get a hold of us, and we'd be glad to visit with, where we see this as the economic. We want to be out there generating that discussion, trying to answer the questions, because we are at a crossroads now that we're going to have to decide if we're going to have this discussion and stay ahead of this and decide how it can work for the Midwest, or are we going to consciously let it go down a road that we won't be able to change? And I don't like the picture of what it looks like if we let it go down the road without us controlling that change.
Joe, thanks for taking the time to visit with us today, and I am sure we will be talking again here soon.
I look forward to it. You have a great day.
That again was Joe Heinrich, the Executive Director of the Smart Carbon Network. As for right now, let's go ahead and take a look at that ag weather outlook. Today, you really couldn't ask for much better fall weather. We have temps ranging in the low to upper 60s, even pushing 70 in some parts of the state. Sunny skies, a bit better than the dreary days we've been seeing recently, but that warmth and sunny skies won't stick around for too long, as we are already looking for rain to return into the forecast. So let's see what the National Weather Service has in store for the next 24 hours. As you can see from the National Weather Service, today we have sunny skies and typical fall temps. Those highs ranging from the low 60s to about 70. Tonight, clouds will increase throughout the night, with those lows ranging from the low 40s to low 50s. And tomorrow, it will be mostly cloudy with widespread chances for showers. Those highs ranging from the low 60s to about 70 once again. Taking a look at the affiliate weather map for tomorrow, Cherokee will be mostly sunny and then a chance for showers and a high of 62. Shenandoah, a chance for showers and 68. Des Moines, much of the same, showers and 68 as well. Waterloo, chance for showers, high of 67. Albia, rainy skies and a high around 70. And Clinton will see mostly cloudy skies with a chance for showers later on and a high of 67. You can find a more detailed forecast for your part of the state by checking with your local Iowa Agribusiness Radio Network affiliate. If you're not sure who your local affiliate is, go ahead and check out the Iowa AgNet website to find a list of them there under our affiliates tab. You can also find all of our daily content, including our 5 daily ag news stories, on that website, again, iowaagnet.com. You can also find us on social media at Facebook, X, LinkedIn, and TikTok. And you can find our video content as well as previous episodes of AMPM on our YouTube channel. Make sure while you're there that you subscribe and hit the notification bell to see when those videos go live. Don't forget as well to check out our free Twice Daily Market podcast on Apple, Amazon, Google, Spotify, and Podbean. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Riley Smith. On behalf of Mark Magnuson, Dustin Huffman, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.